What you created with BeautyCon, like I hate to use the word disruption, but it was truly disruptive. You turned beauty on its head, and the impact of those early BeautyCons, I think, are still seen in the industry today. And many people attribute BeautyCon to sort of tapping into Gen Z, but it was so much more than that. You were really sort of the bellwether of these important trends like community, making beauty inclusive, experiential retail, and bringing brands sort of to life beyond the product. I took my entire team, I had an agency at the time, to the BeautyCon in New York because people were like, should we be doing this? I'm like, I don't know, I need to go see it. And I walked in and I was like, never seen anything like this before in my life. In looking back, like you have this deeply honed ability to sort of see where consumers are going next, or maybe you have the ability to trust your gut and go there with them. Kind of thinking about sort of BeautyCon and where we are now, like where do you think we're going next? I know it's a big question.
So many questions.
I know it's so many questions, and that's why this was hard. So,
Ooh. It's weird that this whole conversation started because I was asked recently to unpack a white paper that we wrote in 2017 and 18 around culture, social justice. I remember we wrote a lot about spiritual exploration and how it would find its way into beauty. We wrote around chapters around gender binaries, and I remember everyone really making fun of us saying, oh, you're writing all this data around saying men are going to want makeup and skincare. And at that time, it felt very obvious and clear. And now I'm clear that typically these early trends, they really take 3, 4, 5 years to hit the mass market. And so we are like in the weirdest time ever right now.
I agree. I mean, when we did the call, we both got on the phone and we were like, what the fuck is going on with the world? Seriously. I mean, and we didn't really talk about it today, but I think like so much of what's happening in the world has impacted, it's impacted some people very literally. And I think others, we don't even realize the impact it's having on us, the visuals we're seeing on TV and everything that's happening in the world. But it is.
There is no way that there's anyone who has a phone or a computer that is not doing a level of emotional labor right now to simply just cope with what you're dealing with, which is not just what we've experienced over the past 2 weeks, but I think it's pretty fair to say that the pandemic really showed us where all of the fractures in our systems and societies, and also just within yourself, right? I think you are able to clearly see with a magnifying glass the fractures within yourself. One of the things I've always really believed in over the past few years is that there was sort of this return to tribalism and groups wanting to hang out and be aligned with their other groups. I think that's why you're seeing consumerism sort of move in that direction, where rather than, when I meet founders right now that want to launch a mass brand, I think having a mass brand is really hard right now. How do you be mass and address consumers when consumers are so psychographically expansive? And I don't think there's anyone that can really sort of be judged based on their demographic data that you're grabbing. So I think right now, the number one thing that I pay attention to when I'm looking at companies or opportunities is how closely connected are they connected to their tribal audience, because these smaller groups, these early adopters of your brands and products, I think are going to be the number one way in which you sort of push to scale. You and I've talked, go ahead.
But don't you also see, you have brands, and I agree, it's like, these sort of niches or tribes are kind of where you get early traction. But then you go into a meeting with a retailer or an investor and they're like, but you're not inclusive. You need to speak to anyone or to everyone, which we know is you can't speak to everyone effectively. So how do you sort of marry that expectation with sort of the reality of this is not really possible for a small brand, and this is actually how you get traction.
I think one of the best things that came out of the pandemic was a reevaluation of what capitalism and stakeholder capitalism was. And I think that anyone who's building a brand right now needs to consider that their consumers are not their consumers, but they're really actually your stakeholders. Mm-hmm. So when I think about your first 5,000, 10,000, 20,000, 100,000 quote unquote consumers, mm-hmm. those people actually believe, and you saw it all over social when George Floyd and the social justice sort of crisis and movement happened, they actually fully believe that you work for them. And you do. But I don't think we were really treating our companies like that up until 2020, 2021. And that shift has now really happened. Yeah. Where I think brands are now having to double down hard into their communities and that's where retail, experiential, and community management, I think really now, it's not just a function of customer service. It's a really integral part of how you build these brands right now.
I mean, we also talked a lot about sort of where we are in the world and, this expectation that has emerged, I don't know, over the past 3 or 4 years, where brands are expected to have opinions and take stances over topics that are highly, highly charged, incredibly personal, very divisive, race, gender, religion, things that you didn't talk about at a dinner table, but now brands are sort of expected to have these conversations, and you're not going to make everyone happy. We live in this sort of call out culture where, like how do you suggest brands navigate that, especially now, because it feels incredibly highly charged?
Most of the brands that I work with that ask me this question, my answer is you should say nothing, because you're not equipped, you have no education, you have no follow through, and it's really performative. And I think consumers would prefer you say nothing than say something performative in this moment. So now, right. I do think you have to acknowledge certain events in life that are happening, but how you acknowledge them, I think, again, has to be true to your brand ethos and DNA. I mean, listen, if you're in crisis PR right now, like, you have a great business, like, you are doing better than ever. I can't even find a crisis PR firm or litigators, frankly, that are not slammed out. I don't even know how people are going to respond to what's going on in the news today. But the majority of brands, I think, should not, because if you look at where brands really got held accountable in 2020 and 2021, it was for performative marketing versus true integration of whether it was diversity, inclusion. And the unfortunate reality is that most of the brands within our industry are still run by white cis men. And so there's not a ton of diversity at the top. So I think it's going to be tough to speak to these larger social issues when the ethos is still not there.
I also feel, I don't know about you, but I feel like we talk about sort of cultural relevance and the importance of cultural relevance. And I think sometimes these sort of larger issues get conflated with being culturally relevant. To be culturally relevant, you have to participate. You can't be an observer. It doesn't really work that way. I think, we've also become so obsessed with data. But it's also, if you think about, and I agree with you, I think, trends take 5 to 7 years. I think we're both the same, where we have ideas and people look at you like you have like 7 heads. But like, where do you go to look for like what's next? Because I know that you are sort of like so immersed in just like culture. And you are one of like the most like intellectually inquisitive people I know, but you can't do it from behind a screen.
For me, I live in the comments.
I want to know where Moj goes all the time.
I live in the comments. And I live in physical spaces. So I went to Taylor Swift. I needed to see. I'd seen her numerous times. I've gone to multiple dates because I think I said this to you. When she put out that record in the middle of the pandemic, I was like, ooh, this is going to be a big shift within culture and it's going to be massive. And you could kind of see it from the streams and the downloads, like how much people were listening to it and on repeat and what tracks. I think if you look at these zeitgeist moments where someone just kind of, it's like a juggernaut and you start to follow that thread, which I'm a little bit of a thread follower. I also just go to stores a lot. I go to experiences. I constantly want to, I'll ask people like Carol, like, what are the best beauty stores to go to in China or Japan? And I have if people who are my friends, I will text you, these are the best stores in Paris. These are the best stores in London. And generally I catch these moments when it's, 800 square feet. I've read about it in a couple different places. But when you go there, you find consumers who are like, they are so crazy about this brand and they are telling like 400 people a day about it. And that's when you know something's going to blow, because we've all learned something very important over the past few years, which is you cannot buy consumers and audiences. You tried. We all tried. Everyone spent $1 zillion million on CAC to try and buy a bigger business. And guess what? The market kicked us in the shins and was like, you can't do that. Your businesses won't be profitable. Your retention will be terrible. Your consumers will call you out for it. And so in the end, it is ultimately brands who've built a strong, intense relationship with their stakeholders, consumers, and they've given them value over and over, and they've listened to what it's like so simple, right?
I know.
You listen to what they want, you show up for them when they have feedback, and you continue to service your number one advocates. And that is because if you look at the largest sort of acquisitions of like rewind 4 years where every fund was throwing, money into a startup of like a JD MBA that came out to start the future of this brand or that brand. I'm not going to say the names, even though you want me to, but I'm not.
I would never ask you to do that.
Those acquisitions have not been as successful as the brands that were truly founded by founders. You and I talked about this. Like the founder ethos, especially within beauty and wellness, is still even though I know it's difficult from like an acquisition perspective, like the founder ethos is the number one thing that consumers connect with on a peer-to-peer basis. I think one person I would mention is you look at someone like Bobbi Brown and you're like, wow, like when people are like, I didn't see that coming, it's like, but I did.
Oh yeah.
Because if you know her, you know she has been the most intensely connected to her core consumer the entire, like before the internet, right? She's always been at the store, signing autographs, doing book appearances, doing editorial, she was every single time that she was asked to do something, whether it was for the Queen of England or a pop-up, she was a yes. And so I think the through line with someone like that, who's a great example of someone who's built a great business decade after decade, is that I think you have to be that in love with your profession right now. Because I don't think you can like MBA your way through this climate within beauty and wellness.
I mean, to talk about the climate on John's previous panel, we are in this sort of calling, if you will, call it a period of beauty Darwinism. I mean, it happens. It happened in 2008. There are a lot of brands that don't really have a purpose. But there are also sort of in these times, I think we also have to get comfortable with failure. I mean, I think it's about framing failure. I mean, I wouldn't be doing what I'm doing now if two of the brands I started that should have sold, but I self-funded into oblivion, sold. I wouldn't be doing this today, but it informs everything I do. And I know that the outcome of BeautyCon was not what you intended, and you have been through it all, but you've come out the other end and reinvented yourself, and you're an investor, and you have such a unique perspective. I mean, what advice do you give brands now, and what do you look for when you're investing?
Well, someone gave me great advice a few years ago to read a book by Pema Chodron. It's like leaning into the edges. That it was like fear. It was all about fear. I forget the name of the book right now, but it was sort of a quote that was lean into the sharp edges, and 100% the outcome of BeautyCon for me was just leaning right into like an experience that gutted me on a personal level. I think when you have the privilege of being lucky enough to have programmed thousands of brands at BeautyCon and worked with the best retailers in the world to program their experiences, because we were sort of working with retailers prior to 15% pledge, and they wanted to bring more Gen Z and diverse brands onto the shelf. And I'm always going to be grateful that we were the ones to have done that. I think you sort of build this internal algorithm. And so the transition into investor was not difficult, because in a lot of ways, the majority of my job at BeautyCon was giving guidance to brands that were specifically launching. You know, I think about brands like Vital Proteins. I think about Huda. I think about, I mean, I could go on and on and on. And so much of how I spent my time was working directly with brands and understanding the underbelly of where their pain was. And your third question was, what's my advice?
Well, I mean, you know, I think...
What do I look for?
Yeah, but I think also the reality is, right? I mean, there's been this sort of narrative of founders and this narrative of build it and Carol will come with $1 billion check and buy your business. And, you know, the reality is that is the anomaly. Most startups fail. Most startups fail.
I do say that to everyone.
You know?
Like, if you want to win, you have... Like, everyone's like, oh, like, this company. I'm like, but you don't know Brian from Starface had a company before that didn't work out. And the majority of great founders have had the most brutal failures, and you just don't know about it. I think we have to sort of flip the script on that and actually talk about it. I will be unpacking in detail, for me, my experience around BeautyCon. And I think the number one reason that brands let me into their round right now, like over anyone else, is because I can sit down and be like, oh, I've been through a recap, understand difficult financing, have laid off people, understand failed, sort of processes, acquisition opportunities, hired the wrong CFO. Like, just I could go on and on, right? Like, and I think that founders desperately need someone to talk to that they can be authentic and real with. And I mean, I'm like in, 81 somewhat companies now. And the majority of my conversations are, I can't talk to the board, but the CMO I hired is not the right person. What do I do? How do I manage that conversation internally? And so I think it's a lot easier to give that advice when you yourself have been on the other side of it as an operator.
Absolutely.
Right? And so I enjoy being on the board and participating on that level now. I feel like I have so much more to give. And I think founders, frankly, need that more than ever, because most of the rounds will be flat. Everyone's already doing note extensions. You're starting to see people want to get out, and their early investors want to get out, which is never a good sign. Every single person's numbers have come back reforecasted. And so this is where we're living. And I actually think that it will give us much better, stronger companies. And you're right, there's a bunch of zombie companies that got $1.5 million in funding that unfortunately won't make it.
I mean, but what do you look for when you invest?
For me, one of the answers is a generic, which is the moat. What's different about you? It can't just be great branding with the same stuff in the tube. It has to have a unique value proposition that's either a different price point or a different set of products and ingredients that we just haven't seen before. And team.
Team is so important.
It's like, I personally love more, I try to stay away from solo founders, because I think the pressure's too much and you implode and your quality of life is misery, and you are just like when I meet a solo founder, I'm like, I'm so sorry. I'm so sorry for you. I'm like, are you, no, for real. And then like my next answer, ask all of my companies I'm in, I'm like, do you have a therapist? Do you have a coach? Because being solo founder really, it's hard. You're managing and managing. Like, we're still not there yet where stakeholder capitalism has really been figured out, because what your investors want is not what your team wants. It is like not the same thing. So being the person that's trying to be, I mean, you're borderline schizophrenic doing it. Like when people be like, you were always changing your mind. You're like 100% I was, because I'd go to the board meeting and this is what they would say. And then I'd come back to my team meeting and they would say this. And you're like going back and forth. I think when co-founders, I love co-founders because typically it's one person who's more either on the product side or operational side and another person that's more raising the money and external facing. I think it's a lot. Like if you look at most of the companies that have really struggled, whether it's from a PR perspective or just economics, it's a lot of pressure. So I really try to find like a great team. And if it is a solo founder, then the first thing you're doing is calling, Shella Ava True Search. And you're like, I need a good GM or president or someone to come in here and help this founder bring it to life, because especially in this investor market, I do not know how most founders are managing the pressure, because everyone's gone from scale to profitability. And it's like, and it's not like, oh, it's only like 20% growth this year versus last year it was like 200% growth. And you're like, yes, but I lost like $8 million buying all these consumers. And so no one can exactly figure out.
But it's also what I find.
Oh, I tell them to go slow. If they don't want
that's
to
what I was going to say. Because I feel for the founders in this moment where, I have never seen brands scale the way they do. These brands that scale to $100 million in 3 years, that's insane. And some of these founders don't have, like before, you had the time to either grow into being a CEO, or you had the time to realize of your own volition that, hey, I'm not a CEO, I need to find someone. And now it happens so fast. And listen, a $10 million company is not a $100 million company. And, so you find these founders really struggling in all of that, in the scale, in the sort of everything that comes with raising the money to scale that fast.
There are a couple companies that have gotten to the like high 8-9 figures, and that's because they hit that like insane zeitgeist of price point. Right?
Listen, it doesn't matter if you check all the boxes and you do everything right, you still need a little luck, because there are a lot of brands that checked all those boxes and they don't exist anymore because they got a little bit of bad luck and they couldn't recover.
It just takes a couple missteps. I think that's what most people don't know, is how easy it is to lose everything. If I think about where I went wrong, it was really like just 2 decisions. And they were just 2 decisions. I could, no matter what I did, I was stuck. And so I think, no one ever wants to do it, but I'm like, you should go take a finance class. I know you don't like it, but you should actually understand how this spreadsheet, what is a pro forma, know what it means bottoms up, understand what dilution means, and like actually run it. Like I meet people all the time, they're like, I'm super obsessed with evaluation and how much we're going to raise. I'm like, you should also be obsessed with dilution, because you get your money only after the preference gets out. They're like, oh, I didn't know. I'm like, no, it's not like an equal thing where everyone gets their, right? That's only in success. But most companies get out in like acqui-hire mode, where you're getting a little bit of the money back and it's not really in the money. So I think, again, what am I looking for? People that are knowledgeable around how finance works, and people who are not, they don't think that running a company is raising money. I hope I never see you again. I would like to give you money, and then I would like you to call me to say who's a good M&A banker or a good CEO or good operator, because your dependency on me isn't that, I'm not setting you up to be successful. Right? So,
Of course. We have 3 minutes left. We could talk all afternoon, but I want to, we have time for a couple questions if anyone has questions for Moj. None?
Carol.
Carol?
Give Carol.
Oh, wow.
Give it to Carol.
Hi, Moj. I want to know what the 2 mistakes were that you made.
Wait, I can't hear you.
I want to know, you said you only made 2 mistakes. Can you elaborate?
Are you gonna buy the book? I'm not gonna talk about my mistakes. I'll talk about some mistakes I've seen made. How's that? I think when you are raising money, there's always these great logos of everyone that they've invested in. My advice is call the companies that didn't make it, that they invested in. Call those founders. Because what you want to know is, who are people when you're not being successful? Who are people when you're didn't hit your numbers? Who are they? And so rather than be like, oh, they invested in, I don't know, for the longest time, it was Glossier and this one, I think you should do your diligence, because they're diligencing you. You need to also be diligencing them. And I think we grew too fast. I think we pushed to grow really fast. I think that, once we got to like 50,000 people per market, we probably could have just owned 1 or 2 cities and just had a behemoth in that sense. It was very exciting to go Tokyo and Abu Dhabi and Dubai and London and all of those things. But again, your operational teams and the teams you need to operate at that level are just, it's tremendous. And
Yep.
I think most of us get into the wanting our next investor deck to look bigger and better and bigger and better. And I'm always really proud of companies right now when I meet with them and I see that they've really stayed focused on what they said they're going to do. And they delivered 100% on that value of, even if it's one, like, you're always like, I get these decks and they're like, we're in 7 different retailers. And I'm like, be in one, like over deliver in one, like crush that one and get them to just expand the shelf space, because I think it's really hard to be really good at a lot of different things. And so I think you need to have discipline, and I hate it when people used to say this to me, but you need operational guardrails, So that's where I think I lend a shit ton of expertise now to my companies, because I'm like, you're just often doing too much.
Yeah. We can do one more question if you have one, Carla? Oh, okay. Carla has a question.
Sure. How much of cultural capital is being created in online versus offline spaces?
How much cultural capital is being built online versus offline?
Online versus offline.
I mean, we just had the metaverse conversation about these sort of communities that are online. But then, there's communities like a Taylor Swift concert.
I mean, but that happened all online.
True.
Right? That was all like a hashtag, right? And that hashtag then became something that meant something. And as soon as she had someone to fight against and fight for, and she became the person that was there to sort of define her own voice, I think that created like a vacuum of a community that, again, like I'll just bring up Bobby Brown. Like she was like, I'm going to define myself. And I think people love a comeback. Like they love a comeback in that sense. So I think a lot of that stuff starts online because that's where people congregate, but then the power of it transcends to when people come out in person, right? So I think it's fun to see a lot of people now coming out for these beauty events again and starting to see what it looks like both in retail and in person. So I think it's hard to scale from like a offline to an online. It's easier to scale from an online to an offline. Does that make sense?
Yeah. Moj, thank you so much for doing this.
Thanks for having me. I haven't talked about all these things with anyone.
I know, and I really do.
I haven't, like everyone's like, talk to us about.
I know it's never easy, but I don't
mind. It doesn't.
Yeah.
I just don't know if anyone cares, or B, I'm like, if it's valuable, great, but I don't. The best thing about like leaning into the sharp edges is like you cannot be a founder and personalize your failures. Like I'm super fucking proud of my failure. I fucking learned a lot and I think we did something amazing and I have a lot of pride and a lot of learnings from it.
Yeah.
Yeah.
Thank you so much.